The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 10th, fantastic Friday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, truly, that's what it's all about. So let's go look at one of our tools, my favorite tool indeed. It's called Become an Ant. You know, ants live by a 4-part belief system, a success philosophy that everyone should live by. Belief number 1, ants never quit. You know, if an ant is headed somewhere and you try to stop it, it'll find another way. They'll climb over, they'll climb under, they'll climb around. They keep looking for another way. Folks, never quit looking for another way to get to where it is you are supposed to go. Belief number 2, ants think winter all summer long. Really important perspective because summer does not last forever, and therefore ants gather their winter food in the middle of summer. Belief number 3, ants, they think summer all winter long. This is a really good one, especially now, because during winter, the ants remind themselves that winter won't last long, and they say, we'll soon be out of here. And on that first warm day, the ants are out, and if it turns cold again, they dive back down in the earth. But as soon as it warms up, they can't wait to get out. And belief number 4, how much will an ant gather during the summer to prepare for winter? You know the answer, all they possibly can. This, my friends, is the way to live. Never give up. Always look ahead. Focus on what you want. Stay positive. And most importantly, do all you can do. Well, let's go check out what these markets are doing out here. Right now, Dow futures are up 24 points. They're trading out at 16,415. S&P futures up 3.5 points. They're trading at 1836.75. NASDAQ futures up 8 points, trading at 35.55. Russell 2000 up about 3 points, trading at 11.57. King dollar back 20 cents. Goldilocks on a run this morning here, up $10, trading out at 12.39. Silver up 36 pennies right now. That's trading out at $20.04. Light sweet crude up $1, trading out at 92.76. Our call-in number is 877-927-6648. Give me a call. Would love to hear from you. Be happy to take a look at your stock chart. Answer whatever question I possibly can. A quick peek around the globe. They're having a good time over in Europe this morning. The DAX is up 62 points, about 0.6%. The FTSE up 0.9%, up 58 points. We got to go check in on the FTSE over in Asia last night. A little bit of a mixed bag. You had the Nikkei, flat. It was up 31 points. The Hang Seng was up 58 points, up 0.25%. And down 0.7% was the Hang Seng, the Shanghai, that was off 15 points. It closed out at 2106. Of course, this morning, it is all about the jobs numbers out here. Pretty dismal. 74,000 non-farm payroll jobs being added out there. I guess about the worst in the last 3 years. But let's go take a look at the market response. Actually, what we first need to do is pick up where I left off yesterday at the 11 o'clock hour. At 11 o'clock, we saw, this is the Dow futures that we're taking a look at. So if you're listening on your radio or your mobile device at tfnn.mobi, thank you so much for doing that. Let me describe to you what we're looking at. It's a chart here for the Dow futures. It's a 30-minute chart for the Dow futures. Yesterday, as the market opened, we saw the Dow futures sell off, cascaded pretty well, and coming into the time frame of 11 o'clock, what I pointed out as we went all the way back to the time frame here, this opened as we came onto January 6th. So as we started Monday's session, what we had on a 30-minute basis, we had a really nice 0.618 Gartley sell pattern. Now, that Gartley sell pattern was confirmed with a big, huge bearish engulfing candle out there. Price went ahead. In fact, that should have really turned into an A to B equals CD down. It did not. It did not turn into that. And so what did it do? Well, it made its 100% move of a move, one of the four things that you should expect of any Gartley pattern. There are really 5 potential expectations of any Gartley buy or sell pattern. It hit number 4, which was the 100% move of a move. And it got all the way down to the low that was established at 2 o'clock in the morning on January 3rd, that price point being 16,336. Well, we know that's a really important support level. In fact, today, I suspect we're going to see that level get hit and tagged again. And if that level lets loose, what it will do, folks, it'll set up a move that should be equivalent to about 160 points down. 160 points down, taking it to about the 16,176 level. If, in fact, it holds a support, we're going to be the old ping-pong ball and be bouncing around in this consolidation pattern here, for God knows how long. I don't know how long. But what we do know is we know where the lines of demarcation are. They are clearly marked on our map out here. And what was interesting is even with yesterday's push down, that's what cements just how important this level is to the downside. And that is the price point, by the way, that we're really looking at. You'd have to say it's a close below 16,000. Let me get the number right here for you. And again, it's a futures contract. Look at 16,336. 16,336 is really the number that we need to be paying attention to. Certainly you can press down below, and that's in fact what took place here at 11:30. So 11:30 yesterday, what took place was the market certainly pushed low, but it came all the way back up. Didn't create a hammer candle or anything. You got a nice little bullish engulfing candle at the following session here at 12 noon. So it also showed us, just simply from a candlestick formation standpoint, where the bulls were hanging out. Now, as we came into this morning's open, into the jobs report, what the Dow futures were able to do was they were able to get back to where we saw this resistance line, this last big cascade as the market opened yesterday, that big old bearish engulfing candle out here. So the Dow futures have not been able to make it all the way back to the top of their consolidation level. Doesn't mean that they can't. And what I'm using as the top of the consolidation at this stage is really the gap down as we came into trading on January 2nd. So when we came back from New Year's Eve, that line has acted as resistance, and that line there is about 16,495. So the Dow futures, even though the Dow's been stronger, here when we take a look at its ability to get back up to its highs out here, certainly this morning, it's been weaker than the S&P futures contract has been. What does that mean? At this stage, not a whole heck of a lot. All I did was just wasted about 30 seconds worth of time. I don't know if it means anything or not. What I do know that we just simply need to be paying attention to are these lines of demarcation out here, this consolidation zone. Because if we see a close below, and I'm not talking about $2 or $3 below, I'm talking, something of more significance than that. 5 points, okay, 10 points, something like that. But it closed below 16,336. We'll know it when we see it out here. Now, of course, as the market was making that move lower yesterday, it was also getting towards what? Towards the bottom. It actually got dipped below the, we start moving into the extreme area of the oversold condition out there. Now, in a true bearish market, getting into the extreme oversold condition, you can stay there for a while. Just like in a bullish market, getting into the extreme areas of the overbought condition, you can stay there for a bit longer as well. So that's going to be important. Let's switch over to the 120-minute charts out here. 120-minute chart, what do we have on the screen here? Oh, yesterday we were taking a look at the NASDAQ futures. We saw the NASDAQ futures broke their rising price channel that I had drawn in on a 30-minute chart. I've got a new one drawn in here this morning on the 120-minute chart. We just have a little bit more data. So we're going to get a little bit of a feel here because the NASDAQ would be the ones that would truly be leading us down. And here in the NASDAQ futures, if we come off of this, and what the NASDAQ did, by the way, yesterday, was it made a nice point 786 Gartley sell pattern. Now, did that with a pretty wide-ranging bar here, coming in at 6 o'clock in the morning. A couple of small-bodied candles all the way up until the market opened from 10 o'clock, from 10 till noon. Boy, it was a true push down. But where it pushed down into, and this is a very important line of support as well, as far as what that price level is, it's probably right around 35.50, give or take. You can see right now we're moving down towards that level. So we're going to get a pretty decent idea today whether or not the market is ready to crack a bit and continue moving further down. Now, where is it that the NASDAQ futures could move to? Look, the ultimate outcome, as as I mentioned, of any Gartley buy or sell pattern is that it really turns into the A to B equals CD. If this is the A to B equals CD down, if we see the NASDAQ futures crack that little rising price channel, says 34.87 would be the likely target. That would be your first target out there. Doesn't mean that it can't get to 34.63, but 34.87 would be a likely target. If it can't bust it down, just means we're going to kind of gravitate in this little rising price channel. For how long, I can't tell you. But what we do know are the lines that we need to be paying attention to, both in the Dow. Now we have those lines drawn in here in the NASDAQ futures, the NQ. Let's take a look at the S&P 500. Let's try to pull this. What did the S&P 500 do here this morning? The S&P 500 got right back up to the area where it broke down on January 2nd. So you can see this looks a lot like the Dow futures contract that we took a look at. January 2nd, the interest session high in that 120-minute session was at 1840.75. You got up above that, got to 1840.250 here this morning, but you can see closed right back up below that level. So that is your area of resistance. Now, it's only been tested once here. Still, it is an area of resistance. With regard to support, the S&P, it doesn't have as clear, at least in my eyes, maybe it does in yours. In my eyes, it doesn't have as clear of a consolidation pattern as the Dow does. So we'll watch the S&P. What is the S&P likely to do? Well, first, let's take a look. Was this a Gartley pattern that actually formed here this morning? Let's go see on the 120-minute chart. Let's go see if, in fact, that's what it did. I believe a little bit above a 0.786 retracement out there. So let's just say the ultimate outcome of this pattern as well, to the downside, and we could talk about to the upside, but to the downside, the ultimate pattern out here would be that it's now formed an A to B equals CD on the way down. That would take you to about 1813 to 1805. I would have to say the 1805 level would be the likely target. Why? Well, that would take you right down into the bottom of its rising price channel out here. That's the rising price channel taking us back into the October 2013 time frame. Dow futures up 21, S&P futures up 2.5. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So upside potential here. If we went back to the Dow chart, I think that's really the one that is the clearest to me, just simply because of such a well-defined consolidation area. And so a break to the upside, and the break to the upside inside of the Dow, it really has to do 2 things. Number one, what I would be using here as what I am using as a consolidation high is the 11 o'clock session on January 7th, and that high was 16,496. Now, look, just breaking above that, it would also, have some resistance here at the 16,500, or could have some resistance at the 16,540 area, because we've got that big gap that it has not filled out there. However, I would have to say that if it then can close above 16,540, you're looking at a move to about the 16,656-ish range out there. And that's really what the Dow futures are saying. With regard to, where we're at trend-wise, like the monthly trend, that's still bullish across the board. The weekly trends, they're still bullish across the board. The daily hasn't really given us yet any type of significant bearish reversal signals. The largest bearish reversal signal that we have out there still resides inside of the New York Stock Exchange. And until that island reversal top is dealt with, and when I mean dealt with, meaning from a bullish standpoint, taken out, the gap is closed, and price moves above the 10,406. I say that you need to remain cautious. Neutral is not a bad stance right here. That doesn't mean you go to cash in your long-term accounts. It just means on the daily time frame, it's the most bearish signal that is out there. If we go take a look at the other indexes, if we take a look at the S&P as an example here, that's the monthly chart. Not interested in the monthly chart at the moment. If we take a look at the S&P 500, it's got a little bit of it does have a bearish reversal type signal here, and that was on January 2nd, a little bear sash candle out here. But you can see the damage has been pretty muted. It's been very muted. In fact, if we only took a look at the C to D lag retracement, meaning coming off of the Uncle Ben Bernanke Day, December 18th, his going away party out there, and you go all the way up to the December 31st high, the S&P futures have not even made just a normal retracement, just a normal, hey, I'm going to work off some of the food that I ate over the holiday, that 4-week holiday period out there, Thanksgiving to Christmas, a little over 4 weeks, right? And it hasn't even made so it hasn't really lost any weight, right? It maybe like many of us out there, had some real great ideas on losing some weight, and in the case of the S&P, it certainly hasn't lost much weight. It hasn't made the 0.382 retracement. Just getting back to its normal weight level would take it down to about 1818. So far, the intra low that we have seen, which was on January 6th out here, got the S&P down to about 1823.73. So that's what's going on inside the indexes as we speak. We know where we'll get the signals out here. At least I believe we know where we will get the signals. Let's go take a look at Goldilocks and silver. And also, by the way, when it comes to the euro, Japanese yen, because I heard somebody ask that question, that too has really not given us much of a signal out here. And what I mean by that is if you come off of its swing point low, and it's the daily chart I've got up on my screen here right now. If you go from, and which is November 7th, that's what I'm looking at. It's different than Ben Bernanke Day out here. I'm just simply, in fact, I could use Ben Bernanke Day. I could use, what was that, the 18th of December? Well, if I use the 18th of December, it's trading right into it. But let's just take a look at really off of swing points out here. And if you come down to November 7th and you go all the way to the high that was put in here on December 27th, it too hasn't even made the 0.382 retracement, which will take you down about 140. So as you can see, it's been consolidating sideways here for the last 4 or 5 trading sessions now. You know, when you consolidate, what happens is typically you resolve yourself in the direction of the consolidation. In that case here, you'd have to say that resolve would be to the downside, and that from a directional standpoint, that would put a little bit of heat or pressure on the U.S. indices out here. But the euro Japanese yen hasn't tipped its hat, in my opinion, out here, and that's why I'd say, you know, you kind of, really kind of in a neutral position out here. It's just on these intraday charts where we're able to identify the patterns that are out there. And anyway, I did say let's go take a look at gold and silver instead of babbling out here. Let's take a look at Goldilocks. You got gold trading up $11 right now. It is cleared the December 19th swing point out there. That's important. In my opinion, that high was 12.26. Of course, what will truly grab the attention of every trader's screen around the globe, and we'll watch for this today. It is Friday. Oftentimes, gold has trouble on Friday. If gold can get above this little descending price channel out here, that's that red diagonal line that you see on my screen. As far as price measurements, what does that equate to today? It's really a great question. I'd have to say you're probably right around 1250. You're 1240 right now. Probably somewhere in that 1250, 51, 52, 53 area. That probably ought to get the attention of traders of gold around the world. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're up to the races. We got the Dow up 18 points, trade out at 16,462. S&P up 3 points, trade at 1840. Composite up 12 points. It's trading at 41.69. Russell 2000 up $2.50, trading at 11.60. Off to a new solar system. Intercept Pharmaceuticals. We took a look at that yesterday. It was up, I don't know, $200 and some odd. Hey, that was not good enough. Apparently, it was just stopping at the space station just to get some more fuel. It has filled up. It's up another $160 this morning. That's up another 60%. Not too bad for 2 days worth of work here, where it closed out on January 8th at $72 out there, and now it's at $4.50. This thing is truly on fire out here. Man, good luck. Good going there. That's a beauty, isn't it? We got Abercrombie and Fitch. ANF is the ticker symbol. It's up $4. That's up 13% this morning. Google's up 278. So 0.25%. You've got Conatus Pharmaceuticals, CNAT, up 33% this morning. So they're having a nice move. I don't see any news behind it. Actavis, ACT is up 1%, up $3. Galectin Therapeutics, that's up 24% out here. Francesca's holding up 16%. Retrofin Inc., RTRX, that's up 30%. More, and a lot of medical pharma stocks are truly on the move here this morning. To the downside, you got the Sears Holdings, SHLD, that's down 14% off about $6. Ageneron Pharmaceuticals, AEGR, down 7% off $5. Humana, HUM, off 3% or $3. YRC Worldwide off 19%. Yikes. That is a shipping entity. I think they were having trouble yesterday. We ought to stop in and take a look at what they are doing. Five Below is below 5%, off 5% here this morning, off 244. Again, our call number 877-927-6648. Give us a call. We did take a look at gold. Let's go back. Let's take a look at silver here. Let's go see what. Let me switch over to a different set of charts out there, and we take a look at silver. So on gold, really gave you the descending price channel that said, and I said, as soon as you see price get above that, let me tell you, traders around the world, technical traders around the world, they're paying attention to this, and we'll see here whether or not silver can get some legs today, because silver now again is back above that descending price channel out here. And if silver can take out the high from January 2nd, which is $20.44, you had 44,000 contracts. You're up at 20,000 contracts right now. That will actually set up an A to B, a confirmed A to B equals CD to the upside out here. So that will truly, and that will start a pretty good momentum move out there, because now silver has broken above this descending price channel a couple of times. meaning back here in the October time frame. Ducked its head back inside here. We saw it break above that level back on January 3rd. We're back above there today. So it is important for silver today to finish at least above that descending price channel, and more specifically, can close above $20.44. The inter-session high so far has been $20.20. 2020, that'll be an important benchmark for silver. In the case of light sweet crude here, that is trading up this morning, but really, nothing to be paying attention to. The 93.08 in essence is your primary trading range boundary number, and it's the largest number of co-located opens and closes. Of course, that's using the Stevo automated system out here, and so now when you break through whether it's a horizontal price range or a diagonal price range, oftentimes you go back and you'll test it. And really that's what we're seeing having taken place so far this morning here with light sweet crude. It broke through it two trading sessions ago. This morning, nothing more than a test of that area. We did see it, the volume on the swing point of November 27, 160,000 contracts. Yesterday, that was hit with 244. At a minimum, we ought to see yesterday's lows tagged once again, 91.24 out there. Because we did reject the swing point low, which was 91.77. So at a minimum, you ought to at least see the lows of 91.24 tackled. If we go take a look at bonds, in fact, speaking of trend lines out here, this one's going to get the attention of folks as well, because this is a trend line. Now, I'm going back to the session from May 3rd. So if we take a look at the high out there, that was 149.13. In this case here, I'm actually using the red line that you see on my screen is actually a channel line, because I'm using the open of that session, and I'm going ahead and I'm using, in essence, the open of the session here on October 30th, and that was at 135.1 out there. And what we're seeing right now is the 30-year Treasury is breaking that descending price channel out there. So that also could capture the attention of traders as that trend line is broken. And what would occur there? Well, if you just take a look at potential areas where bonds, where the 30-year could bounce to, from a retracement standpoint, if you go from the high out here at the consolidation, and bonds have been consolidating and broke that consolidation, and I'm going back to where it retested the consolidation level around the 135-ish level. And that was on October the 30th. And if you go from that swing point high, 135.23, all the way down to the low, you can see what it's done here so far this morning. It's made that dead cat bounce at 0.382. So I would say in the case of the 30-year Treasury, it's already getting the attention of folks. People are taking a look at it, as they should when you break a price channel or trend line or what have you. And I would say it closed above 130.25. That sets up your normal 0.618 retracement in the 132.21 level. So that's what's going on inside of the 30-year Treasury. If we take a look at natural gas out here, natural gas, this wants a lower price. Let me take a look at the it's the G, that's February, right? For February. So if we got take a look at the February contract at the moment. You can see it's made the 1 to 1.272 A to B equals CD down right now. Today, if it were to close like that, that would be a hammer candle. Now, the importance of that, if it were to close right around here, which is we're trading at $4.03, so somewhere between 4.032, 4.037, or 8, or what have you, would create a hammer candle. That's important, because if the low, which is 395, gets taken out, boy, if you're long, you are wrong when it comes to natural gas. But it's where the bulls would be making their first stance, and that's at the 1 to 1.272 A to B equals CD on the way down on the February contract out here. What I would be concerned with is the mere fact that we've seen velocity to the downside. The C to D leg is much stronger than that A to B leg out here, and you've got some volume behind the move as well. So what does that say? It's a great question. Until we actually see the bulls truly come in, defend their position, it opens natural gas moving down to about 371 in this contract here. The 389 to 371-ish area is where I would be focused on. Volume will be a big teller there. So we haven't covered the currencies. Let's go see what's going on inside of the currency world out here. Let's take a look at the euro, U.S. dollar. Let's go see what the Queen has done. We know that the downside potential inside of the euro right now is fairly limited, just as the upside potential is limited as well. And what I'm paying attention to, this is a weekly chart. I'm really paying attention to the bottom blue line. That's a rising price channel. But I'm really taking a look at how price has really narrowed down into this little cone. And whichever way it breaks out of here, that will be a telling story to us. So I would have to say the euro here, other than just finding some really short-term charts that you would trade the euro on, the 15-minute, 5-minute, something like that. I think that the potential to the upside and the downside is relatively restricted and will continue to get restricted until we break this cone of resistance and or support. So that's my take on the euro as we speak here right now. Let's take a look at the other currency pairs and see what pops up. We got the U.S. dollar, Japanese yen. This is the monthly chart. Let's switch from the monthly to a daily chart, see what we've got going on here on the daily chart out here. No real give up here inside on the daily chart of the U.S. dollar, Japanese yen. Its pullback has been relatively muted out here, and as it should be. If we go back to that monthly chart out here, to me, this tells the story, and that story unless the U.S. dollar, Japanese yen ducks its head back into the descending price channel, it's a real breakout that we have here. So with this being a real breakout here, I would be, at this stage, more looking for long trades than short trades on this currency pair. The story changes if, in fact, the U.S. dollar, Japanese yen can dip itself back into this descending price channel, as it did after it broke out back in 2007. June of 2007, it broke out, got back in it in July, and in July, price moved all the way back down to the bottom of the price channel out here. So at this stage here, I think you have to remain bullish on this currency pair. That's the U.S. dollar, Japanese yen. Let's go take a look at the Great British Pound out here. Great British Pound, U.S. dollar, and I did want to take a look at the FTSE as well. I want to see if it's breaking its 2007 or just testing that area. Inside of the Great British Pound, it is attempting to get up over this resistance level. That is the black diagonal line going across the upper portion of my screen. And the price point there is 1.645. You're at 1.6457. Is that the number? Yeah, and right now you're actually slightly above a 1.6460 out here, so it looks like I'm adjusting that just a tad. But, boy, a breakout above that level, it actually says the Great British Pound is going to break a huge consolidation. It's a consolidation going back into the 2010, January of 2010. So you're talking about a 4-year consolidation inside of the Great British Pound out here. So that may want some upside action. That upside action, if you can break the consolidation, takes you to about 181. And that is certainly not unreasonable, because if you go from the swing point high back in 2007 down to the low that occurred in 2009, that happens to be your 0.618 retracement level, 182.34. So right now, if I were trading the Great British Pound, which I am not, I would actually just I would just be patient, knowing that on the weekly chart that this thing may be breaking to the upside out here. So that's what's going on inside that currency pair. We'll see what the Aussie U.S. dollar is doing. The Aussie U.S. dollar has been traveling in a descending price channel here. Looks like it's trying to get down and test that area right now. Well, not right now today, but that's what it looks like it is attempting to do out here. I got a request here to go take a look at Apple, so let's go switch over to a couple of our core stocks out here as we take a look at Apple. Give me a moment here. So Apple now down below the 50. Is that the 50-day I've got? Yeah, I've got the 50-day on this screen. So yesterday closed below the 50-day exponential moving average out there. That's never a good thing, especially for a high-visibility stock like Apple out here. Apple has also broken below the hammer candle. That's never a good thing as well. That hammer candle was December 18th low, 538.80. Now, that hammer candle is kind of suspect to begin with, but most people don't really don't use candles. Quite frankly, most people don't use candlesticks properly to begin with. But in this case here, because of the gap down from that prior session of December 17th, made that candle somewhat suspect. In this case, though, let's just take a look at volumes no A to B equals CD down or anything. And volume yesterday wasn't too bad, only 9 million shares to the downside. And that's really going against 14 million shares from the trading session of November 26th. It's going against this big key reversal session out here that is now trading below, which is from October 29th. So looks like it's probably headed down to the swing point lows out here as its next level, which is November 21st, right around the 513 area. Could find some support at the 200-day exponential moving average. I don't know. It's not looking good. Now, normal back off here with regard to Apple. Let's just take a look at that. If we just take a look at normal A to B equals CD patterns, you would expect to get to the 0.382 retracement level. Well, the 0.382 retracement level on Apple, and that would say that, hey, there's nothing really wrong with it. That would take you to 503.98. Coincidentally, at the 503.98-ish area happens to be the 200-day exponential moving average. So it looks like that is really the target here for Apple. As long as I'm in this area, let's go take a quick peek and see what we do see here. Let's take a look at IBM and see what it is doing. IBM having formed a 0.786 Gertley sell pattern, but it really has not given you the sell signal as we speak here. You'd really have to blend and stitch together the last three candles in order for that to occur, and you would need to see it close today below 186.38 out there. Right now, trading at 188.18. So IBM has not tipped its hat yet with regard to what it wants to do inside of the market. Let's take a look at what else we have inside here. Google not doing a whole lot. ExxonMobil. Let's take a look at ExxonMobil. I understand that ExxonMobil was maybe downgraded yesterday. Excuse me while I took that. So 107 really is the, 100 was the target. So we're looking at here's a great example of a consolidation pattern and how they typically work, a majority of the time. I don't know what the percentage is, but it's a high majority. And if we take a look at it, it was traveling in a 7-point consolidation range. That was from about the 93 level. You kind of use the high from October 22nd down to a low of about $85 right around April the 17th. Breaks the consolidation level. Now, here's where, it broke the consolidation back in July of 2013. Came back into the consolidation with a gap down with some accelerating volume. What did it do? Go all the way back down to the bottom of that consolidation. Got down there in October of 2013, broke it, and I think Warren Buffett was buying the bottom of that consolidation. Broke it and got up to a high of 101.74. That was your measured move out there. Right now, just traveling sideways. 877-927-6648. Dow's up 15. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his Opening Call newsletter. Right now, you can get a 2-week free trial to the Opening Call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
As Schultz used to say, very, very interesting. You know, you got to get that clip because I suck at it, and so I can't give you that. But, you can use your own imagination out there. Now, what's so interesting here about these markets as I take a look at, because, as we come into the last segment, I always like to leave you, okay, what should we be looking at here today? And so one of those areas, I talked about it, touched on it a little earlier, was the New York Stock Exchange, that island reversal out here. Now, as I take a look at the New York Stock Exchange, the wider swath, the wider breadth of the marketplace, it's actually the index that's leading the charge to the upside here this morning. Right now, you've got the New York Stock Exchange up 27 points. Still has not rescued the passengers on that island out there, but it's up 0.25%. No other index is up there. It's got net advancing issues right now of 992. Now, to the downside here, so here's where you'll probably get a really good read. Let me see if I can give you the number. Let me switch over to a tab on my spreadsheet out here. Looks like 720 is the magic number. 720 net declining issues. So that'd be quite a reversal from where you're at right now because you're at 990 some odd positive net advancing issues out here. And the high so far inter-session has been 10,357. The low of that island out there is 10,366. So, it's trying to get out there to rescue passengers. And that's something we want to pay attention to. So, again, gave you the number on the net declining issues. I don't even remember what I gave it. But that number you want to be paying attention to today. Likewise, if it's able to close, if the New York Stock Exchange closes inside 10,366.58, to me that would be a very bullish signal out here. Is that possible? Yeah. Anything is possible. But if we take a look at the markets here this morning, you got the VIX index. It's down a bit. It's off 26 cents. It's down 2%. It's trading out at 12.63 out here. So certainly the VIX is not giving. It means you got a lot of, to me, at this stage of the game, a lot of liquidity inside of the marketplace. So the VIX is not giving us any kind of a real bearish signal at this stage of the game. The New York Stock Exchange is the wider swath of the market, and it is actually holding up really well here this morning. So that's why I say pretty interesting interesting, or very interesting, however Schulte used to say that. So what is it that we could expect then? What's the expected outcome for the day out here? I just think we're in this little trading range right now, and until it busts one way or the other, a neutral stance is not necessarily a bad position out here, or play the consolidations. Remember, consolidations are very difficult to play unless you play them by selling at the tops and buying them at the bottoms, and then when it breaks, just take that small loss and flip that position. That is the best way I've been able to identify as a way to play a consolidation. And I think, quite frankly, that chart that we took a look at on ExxonMobil was as good of an example as any that is out there. So right now the Dow is off 3 points. The S&P is down 2 out here. And currency-wise, let me go back here and see if we've got any tip of the hat out here inside the currencies. We'll also do real quickly is take a look at the ETF volume out there as well. But give me a moment here to go find that Euro Japanese yen. Well, that's gold out there. I'd say it's also interesting to be paying attention to gold and silver out there. You really should. Where is the Euro? Now, Euro Japanese yen not really tipping its hat to anything here this morning. I did include an extremely fascinating chart inside of my newsletter service here this morning. Had to deal with the opens. If you haven't tried Mastering Probability, today would be a really good day for you to go check that out. Remember, it comes with a 30-day unconditional money-back guarantee out there. You will learn a lot. You'll make some money. That's a beautiful thing. So it'll pay for itself. And all I can say is have a fantastic Friday, folks. I haven't said this for a while, so I will close with this. Always remember this, folks, and that is that you have an amazing power within yourself. And that power, it's so strong, it'll create a life of abundance. It'll cure incurable diseases. It'll build billion-dollar businesses. But most of all, folks, it'll create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great weekend. Look forward to seeing you Monday morning. Take care now. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.